It's excruciating. Hi, Dean Jenkins with followmetrades.com, and watching the market and the news. It's excruciating, right? We're on pins and needles here about what's going to happen next. And for me, as a technical analyst, right, the reason it's excruciating is if we look at this current pattern, I'm showing the S&P 500 daily chart, right? We've got a super clear pattern, a low, lower high, new low, just broke down Friday out of this channel. That's a screaming short signal. But we've seen some synthetic, I guess that's the best word, things driving this market. And, for those who are accustomed to traditional combinations of fundamental technical analysis, right? This whole recovery, from May up through August, it didn't make any sense. And but yeah, here we are at record highs recently on the S&P 500 on the NASDAQ. So the reason this is excruciating is the setup for a short is super clear, but in the back of your mind, you're going, but is there something that's going to come in and disrupt this? So the answer to this is, I guess, I know for sure. The answer to this is to have a trading plan and to follow it and to accept that in the short term, there may be times that it doesn't work out, and all trading's based on probability. There's no certainty. So we've got the probability, we've got the clear technical setup here for lows to continue, probably down to the 200-day moving average or below. But we can temper that, and we can take smaller initial positions and manage the trades and whatnot. We don't have to go all in. We don't have to bet the farm. That's never a good strategy. So it's excruciating because the opportunity looks really clear. But in the back of our mind, we're going, boy, a lot of rules have been broken this year, and things haven't always gone the way they usually go, and I don't want to get burned. So we're going to follow the probabilities. If this thing opens up down, we're going to go short. We may put a toe in the water with a smaller position and then add to it later if it develops, and that's a legitimate objective strategy. I'm looking at the futures open, overnight futures on the S&P 500. Here we are, 10-minute chart. And, we had a pretty good down move on Friday. It opened down, and then it climbed up, and it's actually a couple ticks positive. We don't know how it's going to open in the morning, but if it's down and this pattern continues, it's got a ton of potential, and we're going to try and participate in that. A lot of things in the background going on. Not a ton of economic news coming out this week. Probably the biggest thing is that every week we get the unemployment numbers on Thursday. That's important. But the passing of Supreme Court Justice Ruth Bader Ginsburg, that is the headline, and tons of opinions already be written about that. Not going to take a position on that, other than to say, the Supreme Court's a big deal, and however that tilts going into the election, and whatever breaking news there is, it could definitely have an impact on the market. So we should expect volatility, swings, some unpredictability. So we're going to stick to reality. We're going to stick to the analysis. Looks like potential for a pretty good move down. And we may put a toe in the water and manage that and see how it goes. And if it reverses and heads up, changes direction, well, we'll try and profit from that too. Interesting times, that's for sure. I wish I had a better crystal ball, but all we have is probabilities and analysis and historical patterns that show probabilities, and we're going to just lean on that, even if cautiously. Hope that's helpful. Stay tuned. If something gets clearer, I'll certainly send an update. All right, take care. Catch you later.